Hey traders, this is Blake Morrow with Traders Summit, and I'm pretty excited. I have a gentleman that I haven't talked to in quite some time, but I always love discussing macro topics and currency markets with Beat Newsbomber. Beat, welcome from MacroBeat, by the way. Good to see you.
Hi Blake, how are you? Yeah, it's been a while,
It
right?
has been a while, but some things have happened since we've talked. Like stocks have rallied to all-time highs, and the dollar's been whipping all over the place, and we have so much to like catch up on, but there's
Absolutely.
so much coming in the markets, isn't there?
Absolutely.
Well,
No, great to be with you again, and thanks for having me.
yeah, it is really truly a pleasure. Now, I do want to I want to give everybody at home a little bit of a backstory to one of the reasons why I reached out to you specifically here over the last couple of weeks is because December we saw some end of year moves, and the dollar Swiss, or the Swiss franc, you could say in general, was strengthening dramatically. End of year and end of month, end of year
Right.
flows, and it was getting a little aggressive. And I myself, I'm like, this is not sustainable. I started playing some Swiss short through the Euro Swiss, through dollar
Yeah.
Swiss, and I started to kind of pre-position myself in that trade going into the very beginning of 2024. Then in Davos, Jordan from the Swiss National Bank, he made some comments about these Swiss franc rules moves. They weren't welcome, and then we started to see it weaken. But at the same time, right within the day before or day after, you'd written a blog about the Swiss franc,
Mm.
and your views tied in really nicely with my position, fortunately. And I read your blog, and I'm like, I have to get Beat here to talk about his views on the Swiss franc and why you feel the Swiss franc could continue to weaken even further throughout 2024. So could you be so gracious to kind of tell us what your views
Yeah.
are and how you've come to your conclusion?
Yeah. Thanks a lot for that, Blake. Yeah, to be honest, I think at year end we just got a real gift because I obviously had already my macro plan for short Swiss for 24, probably going 25. And I couldn't believe my luck when people thought that between Christmas and New Year is a really good time to do balance sheet adjustment in a market that is just non-existing, right? So we got like some really levels for steel in Euro Swiss, 92.5, dollar Swiss, what was it, down at 83.5, right? And I just looked at it, go like, you know, even SMB is kind of stupid enough not to be around between Christmas and New Year because that should not have been allowed. And this whole fixing stories now happening via the algos just a bit stupid, but that's a topic for another day. To be honest, I've been happy because I loaded actually a lot, I actually overloaded into that dip. So I was way ahead of the curve what I usually would be. I would start to build the risk and the story and things fall into place. But that was just such a ridiculous level that I just had to bring all the positioning really just right to December, really, right? Have a nice low reval for 2024. Now, the story is as follows. That's really why I believe this is going to work this time. And I will add a few other trinklets to it later on. Um, I think the Swiss has been very, we could say almost overvalued for some time. There's various reasons. A lot of people stopped playing the Swiss after the 2015 shock. So that means the entire carry story has only unfolded in the yen. You've been around for quite some time. Usually it's like yen and Swiss, obviously always more in the yen because it's a bigger market, still a little bit cheaper interest rates to borrow yen. But they come hand in hand, dollar Swiss, dollar yen, usually were pretty much, or euro yen, euro Swiss would probably go hand in hand. Now, a lot of people they turned their back on Swiss franc because of that 2015 shock. And so we had to find a way to get them back. And I can actually know, and I can tell you that I have not had so much feedback on a blog that I had on that Euro Swiss one. And that goes into the hedge fund community, that goes into the real money community, that goes into people you wouldn't expect to call me to ask about it. This is the first time probably since I don't want to say 2008 when we had the other sort of problem, or 2012 with the Greek crisis, but let's just say 2015 is maybe easier. So let's say nearly for 10 years, no one did give a damn when I wrote the piece about the Swiss franc. I was on my own, right? And this time it was not just, I was just walloped with questions and stuff. So which shows me for the first time in probably 10 years, people participate, right? And this is not just a speculative bubble. So let's quickly go over the fundamentals. The S&P realized the Swiss is too strong, right? CPI inflation has come down a lot faster than expected.
And just this week.
Yeah.
Yep.
Yeah. And already before that, we've gone to 1.8%. So we already gone below 2% for quite a while. So that was the first sort of recovery. And so then comes just the realization that, why, the Fed did pivot, which I'm sure we touch on later on as well. You suddenly have like CPI falling off a cliff in Switzerland. I just think they would not want to cut rates already, because I think deep down, Jordan wanted to go to 2%. He only got to 1.75. And so I think he goes like, I rather have a weaker Swiss, right? So what did the S&P announce in December? They said they stopped buying Swiss, right? So the entire foreign exchange, the mantra up to that point was we buying or selling Swiss depending on what's going on. We know for a fact, just look at the chart, that the S&P bought quite a lot of Swiss in 2023, reducing the balance sheet, right? All the QE has happened outside of the Swiss franc, right? Because the Swiss franc was too small. The S&P had to do QE against the dollar, against the euro, against a diversification of currencies. So they had to start, when they shrink the balance sheet, they were buying Swiss franc last year. As it looks now, by the speed at which the CPI came down, probably showed the S&P that they let the Swiss franc probably get too strong last year. And so what we now have is obviously, I think, did you see the price action into end of January? It was another fix that took us down to 93. And I think the S&P was really collecting euros or dollar Swiss into that dip. We saw it in the sight deposits last week and in the FX reserves. So that sort of gave credit that there's a line in the sand now from the S&P. If the Swiss franc were to strengthen for some reason, they sell Swiss, so they on board. Then the next thing we have, and we briefly touched up on this before we started the session, is the world is very much engaged in the yen carry, as we know, right? We just seen the move again to $115 yen, and if you look at some of the cross yen. So the yen is the yen trade weight index is very, very low. So we have a BOJ window probably going into spring, April, where it could be that the BOJ ends negative rates. So that means we have a very undervalued yen. We have a very overvalued Swiss. So now everyone who's still keen to do carry, which I'm sure they are, we still have very high yields in the US and elsewhere. You want to start doing carry, but instead of the yen, you start to do carry against the Swiss. And I think this is now the story, right? I think we start to see outflows out of the Swiss market because people realize that maybe those higher rates that we have elsewhere in the US and Europe is maybe on borrowed time, depending on how much the Fed is going to end up cutting this year, who knows? There's probably another discussion. But I think we are at a point now where the market realizes to just have a Swiss franc parking space and an overvalued currency with low yields, and either the yield has to come off because of the low CPI or the currency has to weaken. So the S&P has to do one of the two, or actually do two, right? Cut in March and make sure the Swiss franc weakens. So it's just like, so to me, I think that wave that we've seen in multiple years as the influence Swiss franc, it's reversing, right? But I think this is not just a story for a little bit of carry or a little bit of few hedge funds buying euro Swiss or whatever. This is just going to be a steady eddy. It's a low wool currency, so those people who expect like miracles in 72 hours, move on, go somewhere else. This is a trend story. This is about Euro Swiss bottoming out wherever, 93, 92 and a half, 93 and a half, wherever. And eventually we're going to go back to parity, 105, and who knows where we're going to be in a few years' time. Yes, we always have this risk element in there. This is why I bring the other cross in, Swiss yen, right? Because what do you do if you are 100% exposed to the yen carry, right? You have a BOJ coming up in April that may hike rates for the first time, so that's quite a big deal, as we know. Again, we already mentioned the undervaluation of the yen, the overvaluation of the Swiss. We are at levels that are just ridiculous. The only reason it was allowed to happen is because no one watches Swiss yen. The S&P doesn't, or the BOJ doesn't, because if they would, it is probably 40% overvalued if you really look at it. I mean, 170 in Swiss yen, those are two low yielders. It's the stupidest thing I've seen on the planet. In 2023, Swiss yen rallied 20%, while Aussie yen rallied 13%. Aussie yen is a carry. Swiss yen is a tiny carry. Yeah, you're not negative carry. But how stupid and ridiculous is it that actually the Swiss yen rallied 7% more than Aussie yen? Aussie yen is a proper carry, right? Swiss yen isn't. So that just shows you that some very strange things have been happening in Swiss yen. As I said, it was allowed to happen because no one cares in terms of officials. There is no level of Swiss yen where S&P or BOJ would have an issue. So it just was allowed to happen because of this imbalance of no one touches Swiss, everyone is selling yen. Guess what? Swiss yen just goes up and up and up. And so it was very hard to manage. Last year, you believe it or not, I was only short Swiss yen. I sold every rally, I bought every dip. At the end of the year, I checked and I actually made some money. You could now argue it would have been easier to be long. You're right. You know what? Whether 150, 160, 170 is just stupid. But
Yep.
coming back to the topic. So now is what do you have to do as an investor? You actually don't have to unwind your carry. You don't have to touch your underlying. So if you borrowed yen, sold yen, and you bought whatever stocks, Bitcoin, whatever else, you just need to sell Swiss yen. If you sell Swiss yen, you don't have to touch your underlying. All you do is you hedge either, probably part. We're not talking about the full unwind, but if you long 100%, maybe you sell 20%, 25% in Swiss yen, at least as a partial hedge. You buy the most undervalued currency and you sell the most overvalued currency. And you hedge your portfolio a little bit against the risk that we yet don't know what's going to happen with this whole BOJ window. And is the market really, is Japan Inc., as in Mrs. Watanabe really starting to bring some money back home to Japan if you get positive yields in Japan, right? We don't know. This is a situation that I'm speaking to a lot of people about that. There's one advantage if you're old, as I am, is you remember the 80s and the 90s, right? And so the last 20, 30 years, it has only gone one way, out, right? So are we now actually finally arriving at the moment when the tide is turning? We don't know yet. I think it's a brilliant, let's say it lines up nicely with the view of the Swiss, of the broader views of the Swiss, that anyone that would start carry now, why would you risk yen carry with dollar yen above 150, which the MOF doesn't particularly like? We topped out at 152 in 2022 and in 2023.
Right.
Do you really want to play with fire? And I could add one little element, and that's why I brought it in, because I'm sure people would say, oh, Gaza and Lebanon and Houthi and Red Sea and blah, 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 right?
Sure.
What you see is Euro-Swiss rally despite those incidents. The Euro-Swiss, in my opinion, has transformed a little bit. It's still a risk pair. Yeah, if the world ends, Euro-Swiss drops. Yeah, no doubt about it, right? But I think we have a few bigger problems if that happens. But Euro-Swiss is more sensitive these days to European risk off. What do I mean? A problem in Italy, like because of the fiscal side, Euro-Swiss would react relatively quick. So problem in BTPs, Italian government bonds, if we were to have some stupid things happening in Italy or to the Europe system in terms of finance, it'd be a problem. I don't see that around the corner. I'm less worried about the broader risk off. And here comes the Swiss yen, and that's why I have both Euro-Swiss and Swiss yen. And I'm playing a little bit with, I may reduce Euro-Swiss into rallies a bit, increase the Swiss yen, and then vice versa. Because if we get a risk of a proper one, escalation of the war in the Middle East, some real and more serious stuff, Euro yen is going to fall off a cliff a lot faster than Euro Swiss. So Swiss yen as a dynamic pair has always to go down in a bigger risk off, right? If the yen rallies and the Swiss rally, the yen rallies about 5 times at the speed. So Euro yen, Swiss yen correlate.
Yeah.
So that means your hedge to the short Swiss is you got to have some Swiss yen for 2 things. One, maybe a great trade because of BOJ, right? Because rates start to converge. Yeah, Swiss rates had to come down, yen rates are going to start to go up. It's not very expensive trade because there's not really a big negative carry to pay, which the others still are, as we know. And it's a hedge that if really some stupid things happen in the world, yeah, you take a bit of pain in Euro Swiss, but you get it back in Swiss yen. So that's the hedge a little bit I have for whatever happens. Crazy world these days.
I personally, I think it's a great setup and a great trade idea. And, playing Swiss at these levels on the long side makes a lot of sense to me. And now the Swiss yen is going to be more on my radar than just the Euro Swiss, which has been my vehicle of choice over the last few weeks. But we talked a little bit, you mentioned a little bit about the BOJ. Just this last week, we had comments from Ueda, confirmed by Ueda, and then you have Kanda, who is really worried about FX volatility, warning against the sharp moves. But before we hit record, we were talking about the BOJ has a very small window. If they're going to move, they've got to move soon, because right now they were more worried about all the disinflationary pressures from China and maybe from around the globe. But if that is now subsiding, and we're seeing it here in the US, where in the US inflation might be stabilizing, this could be that door that opens for the BOJ in the next month or two to really tweak monetary policy. What are your thoughts there?
To be honest, I was very disappointed that they didn't blink in 2023, because that was part of my 2023 plan.
Me too.
There's a bit blinking already. And then I just stepped back, right? As I indicated earlier, I'm an old trader, so that means I remember the 90s, and I remember this whole fight of deflation. So I stepped back and go like, okay, if you're in his shoes, would you really just run like crazy panicky if you finally get some inflation? Probably not, right? So I kind of started to understand. You knew my view about, the front loading of the Fed and the ECB. I always felt they hiked they hiked too far. I know a lot of people disagree, but I really believe that many of the factors were transitory. We saw it in the speed, how quickly it came down, that some stuff was transitory. I think the Fed hit the pivot because they realized they probably hiked rates by about 100 basis points too much. And now comes that sort of window for the Bank of Japan, as you rightly say. We have this wage negotiation in March and in April. So in theory, that's why everyone goes for April, because then they should have most of the wage negotiation in Japan. And we kind of know, okay, if it's X, it's probably very likely going to move, blah, blah, blah. I think they're going to move anyway, because for just the reason you just mentioned, right? I always, in many posts I wrote over the last years, we argued about, everyone goes, oh, Japan is so wrong. And I go like, well, wait a minute. Who says? Maybe the truth is in the middle. So Fed and ECB and BOE went too fast, too quickly. In the UK, I can tell you that the hikes from the BOE added to inflation quite clearly, right? So you hike into a non-growing economy where people have to refinance mortgages, and costs just went through the roof, right? And everyone had a freebie, goes like, yeah, we talk cost of living crisis, why not hike prices anyway, 10%, right? So that was like just a free for all here. Not quite sure how it was elsewhere, but the reality is, I think the truth is in the middle. BOJ is probably going too slow, but the others went too fast. And somewhere in the middle is probably that kind of, whatever that means in yield terms. I'm not a fixed income guy, but I just know the history of Japan and the DNA of the yen. And if they move, If we start to see the front end creating positive yield, you will have part of the Mr. and Mrs. Watanabe's money will go back home, period, right? So I'm less concentrating on these people who go from abroad and buy the Nikkei or this or that. A lot of real money guys, they don't, they FX neutral. So those are not the guys I'm watching. Yeah, a few discretionary guys, but on balance, large pension funds, if they buy stuff, it's FX neutral. But Mr. and Mrs. Watanabe, they exported their money for the last 25 years. We don't even know how much money that is. So if you only talk 5 or 10%, 10%, let's say, it's probably fair to say that if you have all your money in something else in yen, which most of them have, to have a chance to at least have 10% back in your kind of home country, in your home currency, probably they take it, right?
Yeah.
So I'm not saying the yen is going to fall off a cliff. I'm not saying the yen is going to explode. Ueda has really set the pace that was quite smart. He de facto ended yield curve control without ending it or telling anyone, right? They done so smart in the steps they took, the way they communicated, talked it down, that people just gave up, right? And I think he so far he's managed not so bad, not good for us, but good for them, right?
Yeah, right.
So I have no doubt BOJ is going to move. I have no doubt that rate cuts are coming in the rest of the world, maybe not as early as thought. That's another story where the market just gone totally nuts to the wrong side too fast, but that's just because we have a lot of impatient people out there somehow. But we're gonna get the 75 basis points probably this year. I'm less worried about CPI, to be honest. I think people are just the stuff I read, and to be honest, some of them are very smart. And I'm not saying I'm smarter than them. I'm just saying, just come on, right? If you've spoken to the same people that now already talk about 1970s reacceleration story, come on. The same guys expected 6% 10-year, right? In this higher for longer story, right? So I think these 0.2 turn, and so I think we should just relax. And I think we saw some of the official former and active Fed members mention it yesterday, that, we don't do policy for a single monthly print.
Yes.
I agree some of the prices paid get a bit sticky, so I could hang around for a bit longer. But you know what? Some time ago, we would have taken 3%. So I don't think it's like such a bad thing, right?
Right. Well, that makes perfect sense to me, and you can see why some of the Fed members have been commenting on the CPI. So, Beat, it's been so great to have you here. I know that's how you pronounce your name, but I'll just say Beat as an American. How do traders follow your work and follow your blog?
Yeah, to be honest, I have my website macrobeat.co.uk where people can hit me up, have a look around, get in touch with me if they have any questions about, as you know, I'm managing money for high net worth individuals. I'm training traders of all levels. I run a chat room. So if people are curious, want to know more, just there's a button on the website, just how you can get in touch with me. I think I'm MacroBeat L on Twitter for those. But quite clearly, if people are curious, the work that I do, you may only see 1 to 5% max on social media, because a lot of stuff I do is a little bit ring fenced, as you know.
Yes.
So if you want to have a real clear look at what I do, hit me up, have a week free trial, chat with me, look what I do, and then you like it, not like it, adds value, no value whatsoever. So I'm macro guy, trading predominantly FX, but because I'm watching the macro stuff, I watch every asset class. So,
well, it has been a pleasure to catch up with you. It's been a long time.
Thank you so much.
I'm going to make sure that it's not so long the next time we speak.
Lovely. Thank you so much for
All
having
right,
me.
Pete. Good to see you.
Thank you,
folks,
Blake.
if you enjoyed the content here, make sure you give him a big thumbs up. Comment down below if you agree with that Swiss call, because I certainly do. All right, thank you very much, and we'll catch you on the next one.
Thank you very much, Blake. See you. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.